Good morning, traders. While everybody is watching gold hit fresh records after Trump's latest China tariff threats, there is another opportunity that I'm looking brewing in Aussie against the dollar that nobody's talking about. Well, someone is talking about probably, but nobody's focusing into probably. Looking at this chart, we just broke a key support level at the 0.6520, not just like a couple of days ago. And I'm seeing a sort of fundamental technical alignment here for a further continuation to the downside. Now, why the Aussie, you might ask? Well, the reality is that Australia sends around 60% of its exports to China. So that includes iron ore, coal, and other commodities. And any disruption, um, any sort of impact in China would reflect on the Aussie dollar, if that makes sense, especially since it's a high beta currency and massively dependent on China. In the US, on the other side, why this pair specifically, the government shutdown, everybody thinks that creates issues in terms of fiscal uncertainty, but the reality is that a shutdown is actually helping with dollar strength because the government is closed and they're not spending, which means they don't pay any debt. Okay, so this is deflationary and supports the dollar. Add 7 flows from the trade war, and you get that setup, which in my mind, it's quite aligned with a technical view here. And we'll go, of course, look at the trend line support connecting the June and the August low. You see that there is a little bit more space to go towards the 64.36 level, okay? Perhaps even lower down. Now, if that breaks lower, of course, that's going to be a much better opportunity, and we would be looking for lower levels that go beyond the 64 support. As you can see, this is a strong level for now. We'll be looking for 63.11 and 62.70. So let's go a little bit further in. Let's zoom in a little bit to see how we can play this out. Well, first of all, we have had a move up to 67, fell down to 65.20, and then went all the way up to 66.26. First of all, let's look what sort of retracement is this. This is anywhere between the 1561.8. Okay, why is important? Because we see that it's a pullback. Okay, and what we want to do is we want to do where we could potentially head towards to, and if there are inner clusters. So we do see the break of the 61.8, which is near the previous low. Okay, and of course, subsequently the 65, which is a very strong psychological support. And we see that the 100 Fibonacci retracement, which is called also the measured move, if you may, but not from the breakout, from the pullback level, we go down to the 64.43. And this brings us very close to the trend line that you just pulled from back in June. So to me, it looks like that 0.6443 or so, it's coming, it might be coming fairly soon. Okay, so given that, okay, because obviously we are just heading down, that there is different scenarios to play this. One would be to short the current level down to 64.43 with a very tight stop loss. Another one would be to, and I think that might be the one that would be looking more of a short to medium term trade, would be looking for the bounce and then short the next leg to the downside, if there's going to be one. So there are risks that we are going to be entering, new risks, if that makes sense, if we did let that go. But here's the thing: for Aussie to continue this descent, it means that the US-China tit for tat continues. Okay, so if we do see this going lower down, and then suddenly there is a taco trade coming back in, and Aussie starts strengthening a little bit, and then boom, suddenly China comes in and says, okay, well, we're going to harden our stance now. And, that would affect the Australian dollar. So that would actually that would be the catalyst for us to look for further downside in Aussie. So the other, of course, technical, sort of technically related view is that these could also be forming some sort of head and shoulders pattern here, right? So we would be looking for a leg down to 64, okay, and then another potentially move up to 66 or so, and then further continuation. Why do I say this? Well, because we are seeing a large sort of shoulder on the one side, quite complex. And the same could happen as we actually try to form the neckline now. So we'll be heading down to 64 to for a neckline, potentially neckline. But we don't really look at the neckline now as, or the head and shoulders as what is going to happen, but we'll look at it more of a supporting factor to head towards the neckline. Nothing more, nothing else than that. Now, obviously, we do get the RSI also being a reset over here, and on the 4 hour we do see a divergence brewing here. But if you look at it a little bit closer, we do see that prices have actually broken below to the from the previous support, and the RSI still has room to go to 30 or below 30, without that meaning that the divergence is going to break down, if that makes sense. So if we see something like this, the RSI will still be looking to go down there. We'll be again looking for a divergence, potential continuation for a short term, and then another leg to the downside. Now, of course, the Fibonacci targets are one thing to take into account. Another thing, which still we can use the Fibonacci, would be the measured move that comes from the low, the breakout point, which eventually is here, or essentially it's here. So that sees an even further decline down to 63.30. Okay, and of course, let's not forget that it really depends on how the situation between the US and China it's actually developing. Bottom line is that while traders actually look for gold headlines, Aussie is setting up for a potentially major breakdown. So we've got trade war escalation hitting Australia's biggest export partner, a technical breakout uh, below potentially that key support. RSI is approaching oversold, but momentum remains bearish, and dollar strength, of course, from safe haven flows. So this is a classic macro slash technical alignment for me, and that's your Aussie USD breakdown from Thinkmarkets. Sometimes the best trades are on where everybody's looking. So trade smart, respect the levels, and catch you again next time.